Now I will explain the answer for question 4, part B from December 2019 past year exam question paper. A. Briefly explain gearing ratio. Gearing ratio is a measure of financial leverage, also known as leverage ratio. It demonstrates the degree to which a firm operation are funded by equity versus debt financing. The best known example of gearing ratio are debt to equity ratio times interest earned and equity ratio. 2. Profitability ratio. It is a measure of profitability, which is a way to measure company performance. Common profitability ratio are gross profit margin, operating profit margin, return on asset or return on investment, and return on equity. Question B1 is based on the financial statement for Abison Berhad for 31st December 2017 and 2018. So from the statement of profit or loss, you are required to prepare the common size ratio for Abison Berhad statement of profit or loss for the year ended 2017 and 2018. In order to calculate the percentage, you need to divide the number, the sales figure, cost of goods sold, operating expenses with the amount of sale. Okay, let's start with 2018 sale. Sale for 2018 is 720,000. Divide with sale, which is same, 720,000 times 100. The answer is 100%. Same goes to 2017. But in 2017, the amount of sale is 535,000. Divide with 535,000 times 100. Then you get 100% for sale in 2017. Cost of goods sold 2017 is 280,340. You divide it with the amount of sale for 2017, which is 535,000 times 100. The answer is 52.4%. For 2018, the cost of goods sold is 475,200. Divide with sale 2018, 720,000 times 100. The answer is 66%. Gross profit, sale minus with cost of goods sold. Sale 100%. Cost of goods sold 2017 is 52.4. Gross profit equal to 47.6. 100% minus 52.4. Similar with 2018. Which is 100% minus 66%. The answer is 34%. For operating expenses 2017, 103790 divide with 535,000 and then time with 100. So the answer is 19.4. For 2018, operating expenses is 151,000. Divide with sales 720,000 times 100. Then you get 21%. Net profit, the amount of gross profit minus operating expenses. So 2017 net profit 28.2. 2018 net profit is 13%. Next, number 2. Assess the development of common size ratio prepared in 1 above. Whether the company growth is favorable or unfavorable. The answer is the company growth is unfavorable because 1. Cost of goods sold increased from 52.4% to 66%. 2. Operating expenses also increased from 19.4% to 21%. Number 3. Gross profit declined from 47.6% to 34%. 4. Net profit declined from 28.2% to 13%. C. You are given the key comparative figure for Iki Berhad and Ibu Berhad for the year 2018. Key figure, which is net income, liability and equity as at 31st December 2018, and also revenue. Required 1. Identify the aggregate asset, which is total asset, held in Iki Berhad and Ibu Berhad as at 31st December 2018. You can find the asset by using the accounting equation. Asset equal to equity plus liability. The answer for aggregate amount of asset for both company, Iki Berhad, is equivalent to 5,539,7400. For Ibu Berhad, asset equal to 1.756100. So the asset is equal to the amount of liability and again, the asset of Iki Berhad and Ibu Berhad is equal or similar to the amount of liability and equity. So this information are given in the question, in the key figures. Next. Number 2. Calculate the return on investment ROI for both company. Beginning asset as at 1st January 2018 for Iki Berhad and Ibu Berhad. Iki Berhad beginning asset is 5361200. And for Ibu Berhad, beginning asset is 1786200. And then there is a note there, use average asset. In order to get the average asset, the formula is opening asset plus ending asset divide with 2. Okay, again, opening asset plus ending asset divide with 2. Opening asset is given, ending asset is also given, and you already find the answer in question 1. Asset ending asset for IKI is 5,397,400. For EBOK, ending asset is 1,756,100. So, use this figure to calculate the average asset. Average asset for IKI is 5,379,300. For EBOK, opening is 1,786,200. Ending asset is 1,756,100. Divide with 2. The average asset for EBOK is 1771150. Net income is given in the question. For IKI, net income is 399,600. Net income for EBOK is 135,100. ROI, the formula is net income available to shareholder divide total asset or average asset. Since in the question, there is a note to use average asset, then we use the average asset instead of total asset. ROI for IKI Berhad is, after you divide the net income of IKI Berhad with the average asset, ROI is 7.43%. For EBOK, ROI is 7.63%. Next, number 3. Determine the amount of expenses for both company. The formula is revenue minus the net income to get the amount for expenses. Revenue for IKI is also given in the question, which is RM 9,553,100. EBOK revenue is 3,637,400. Net income is given in the question. IKI Berhad, net income is 399,600. EBOK Berhad, net income is 135,100. To get the amount of expenses, just minus the revenue with the net income. IKI Berhad expenses are 9,153,500 and EBOK Berhad expenses is 3,502,300. Number 4. Based on your answer in 2 above, observe on the ROI for both company. Assume competitor average is 4% return. So you need to compare the ROI of IKI Berhad, EBOK Berhad with the competitor average return, which is at 4%. So when the question asks you to give your comment, mean you need to analyze the ratio. You need to interpret the ratio and make a comparison. ROI result for both company as compared to industry average or competitor average are favorable because 1. ROI result for both company are higher than industry average. IKI Berhad 7.43, EBOK Berhad 7.93, and industry average is only at 4%. So both company ROI are greater than industry average or competitor average. Number 2, ROI result for Iki Berhad and Ibok Berhad are positive. It means that the net income exceed the average cost of investment. Number 3, ROI result for both companies show that they are more profitable than industry average. So that's all for question 4.